I wanted to share my insight on today's price action because I feel that I'm at a point in my trading journey where I'm able to do that. I'll explain the shorts today. I've seen short opportunities and obviously long opportunities. The shorts being more challenging, they require more experience, I would say. And then the longs didn't require, uh, you know, that much experience or anything. But I'll cover both, and I'll give like a my honest opinion about everything, right? This is how I see the market. We have sorry, I don't have a I don't have a script for this, so I'm just thinking like where should I start? I guess I'll just start anywhere because I'm gonna start rambling anyway. So short opportunities, like I said, require more experience because number one, we're at all time highs. So you don't want to try and call the top of the entire market. If I call a top at all time highs, I'm just seeing short opportunities, but I wouldn't say that this is the top of the market because I don't think anyone can do that. Now, I did call this top again, not the top of the entire market, just the top of my price swing that I want it to top out at. I had a weekly draw of liquidity. It was an implied weekly draw of liquidity because being at this at one point today was the new all-time high. So we weren't trading up here yet. We were I don't need to go on the daily chart to show you, but you could look on your charts. We weren't trading up here until 7:30 a.m. today, right? This was my implied weekly draw of liquidity. And being that we traded up to it, my weekly objective is hit. As we trade above it, we're trading in a premium now. At all-time highs by default, we're in a deep premium, right? Because it's the land of discovery up here. Deep premium, weekly objective, and the third thing is TGIF. So TGIF, this is a ICT setup. The TGIF is when we anticipate a weekly retracement of 20 to 30%. And you find that by going to your weekly chart. You get your fib retracement tool, get the high and low of it, and you can put in your settings the 20 to 30%. So that's what my blue levels will be on the smaller time frame. So we go to the smaller time frame, and there's the fib. Now, at the time, like I said, this was the all-time highs. We're obviously trading higher than that right now. But at the time, 7:30 a.m., we're trading at all-time highs here. So I anchored to that. Anchoring to this high gives me three specific levels, not an area, not a zone, three specific levels. The first being 27,198. This would be the low hanging fruit objective, and that's what I would target because it's Friday. You don't want to leave, you don't want to give money back to the market on the Friday. That's number one. Number two, we're at all-time highs, so that's extremely bullish. So we're doing a contrarian trade, right? So I don't want to do a contrarian trade and hold it to terminus, right? I want to just take something off. I rather watch it go to the full objective, whether that's 30% or consequent encroachment, which it does here. I rather it do that without me and get out here. If I have more than one contract on, I would take partials at the low hanging fruit, and then I would just trail my stop. And I'm perfectly fine with getting stopped out here. because I personally don't like watching retracements. I know that they're gonna happen. I know when how far it's gonna go. Like I knew that this was gonna pull. I knew this was gonna pull into this Sibi here before going down there, and that comes from me anticipating the 9:30 open. So 9:30 equities open. Above that, that's premium, and that's the premium PD array. Send us lower. So also that's another reason for the short idea. I forgot to mention that the 9:30 manipulation. So if when we were trading higher, I'm like at 9:30, if we're bullish, we would want to trade lower to manipulate price lower, and then that would bring us into a discount to send us higher, which that's what it did. But that's another reason for the shorts. But having the right narrative on the shorts is what primes the longs for today, right? So everything I just said, it's not that everything is reversed, but it's like a dance. So everything I just said was all the narrative bringing us all the way to over here, right? Consequent encroachment of the TGIF. If you are not experienced like that and you didn't feel comfortable shorting this into TGIF, you could have just waited for it and take the more, I don't want to say, yeah, I guess it's higher probability. Longs are higher probability within the context of what's going on here. We're at all-time highs, so that's one reason to be bullish. We traded into the TGIF. That's another reason to be bullish. I mean, I can keep, yeah, I might as well just keep going. So another reason to be bullish, the custom indicator I have right here, I made this. This indicator essentially has my thought process. So you heard everything I said leading up to this short. I was able to code my thought process into this indicator so that this indicator knew since like 6 in the morning. This indicator knew that I would want my trade to be in between 10 and 11 today. So everything that I just explained plus more, like a lot more, it computed all of that, and it's like it just spits this out. It's like, hey, you're clocking into work here. This is your high probability setup for the day. It's not that every single day. This changes. These are the same way I use very specific levels. This is telling me very specific times on very specific days, and I really enjoy that. It's really fun. So I was getting into the longs. So trading into the TGIF, that's bullish. All-time highs, that's bullish. Your multiplier, that's another reason why my custom indicator doesn't have buy or sell signals on it, because you don't need it. It's giving you the time. It's giving you the when and where. The how is up to you. How you can enter this. I'm gonna give you guys. This should be like a master's class. It really should. So okay, I'll just say it. So this is like the type of video that I would want to put inside of my. I have a e-learning hub where I share the framework, the study framework that I use to learn smart money concepts. It's in my premium, and this is the type of video that I want to put in there, because this is practical application of the concepts. And although I create like the pathway, the study pathway, this would be, I would say this is more advanced, because after going through the entire pathway of learning through the study criteria that I give, you would be able to follow along with this. That's the hard part about explaining stuff to, I don't want to say random people, but if someone doesn't share your methodology and the way you view price, I mean, some of the stuff I'm saying might not even make sense to every type of trader. Like support and resistance traders, they may be looking at some of the stuff I'm saying as, oh, he's just saying uh, break and retest, or this and that, when I'm not. Like I'm being very specific on what I'm talking about, because it has to be applied to the logic of the concepts we're studying. So I'm gonna put this inside of my premium, but I'm also gonna make this available on YouTube for everyone to watch, because I feel like this could be very helpful to somebody. So anyway, continuing, we have this BISI, buy side imbalance, sell side inefficiency. This could be your multiplier looking for that bullish fair value gap. Boom, it goes into it, blast off. Your multiplier could be for Fridays. It could be just waiting for the TGIF setup. It respects consequent encroachment right here, and just randomly that BISI is laying on top of it. That's very random, right? No, it's not random. This is an algorithmic price signature. This is the stuff that we look for. This is why I would even, that's why I'm looking at this BISI and not any of these other ones that people would try to trade on the chart and get chopped up with. This makes sense because this is this is the one to look at. I mean, I don't know how else to say that. This brings the context and narrative and all that fun stuff, right? So there's your entry right there. Personally, I would not use this. I would look at it, I would watch it, but what I would use is the inversion fair value gap right on top of it. I don't know if you guys see that, so I'll draw it. That's what I would be referencing if I got in on these longs. I would watch it wick into this BISI, but candle closure in the SIBI is what I want. And either one is perfectly fine. There's other PD arrays here too. I don't really want to sit here and nerd out on that too much, but long story short, your multiplier doesn't matter. So that I was just explaining why my indicator doesn't say buy or sell, because if it said that, that means you don't know what you're doing, and you should know. I mean, or at least I wanted to know when I was learning these concepts. I didn't want it to just say buy and I'm buying this out. Like, I want to know why this stuff is happening, right? And what to look for. That's arguably the easy part, right? Knowing when, that can get, it's not hard. It's really not hard. It's just another layer, because we trade time and price, but time is the most important factor in ICT smart money concepts. So my thought process is learn price and then time, or you could learn time and price too, but price could take a little while depending on what your multiplier is and how you actually view price. You may have to reshape your whole thought process on it, and that's usually what people need that pathway for, and that's what I created that for, and that's what I went through. I had to relearn price. I had to relearn how to read these candlesticks. The time, you can always write time down. Like, again, this is really all you would need as a quick reference. If anything, you just need a watch, and I don't wear a wristwatch, so I made this, and this is gonna filter my thought process as well. So it's a tool to just help me speed up the process. So inversion fair value gap, long, BISI, whipped into it, long, TGIF bullish at all-time highs long. That's really all you need. And then here we are. It's 3 p.m. and we're up there. Still running. I would say the last thing that I want to mention is the fact that, let me clean up the chart a little bit. I'll leave the BISI here. So there's something interesting about this BISI as well. So remember the TGIF, consequent encroachment. You don't have to remember it. I'll put it right here. The TGIF, consequent encroachment, is right here, right? These candlesticks respect that level. There's a BISI laying on top of it. So that's 1, 2. There's a third thing here that you guys, or I don't know, maybe some of you are looking at it. So see how this gives me the time? Remember I said we trade time and price. So time, 10 o'clock to 11. That is $10 o'clock to 11, right? There's another confluence here. The London session liquidity. London buy side liquidity is, it should be here. It should actually line up with consequent encroachment of TGIF. And I will show you right now. There you go. This is London high. See this swing high here at 4:21 a.m. That's London high. London high is the exact London high is the exact bottom of the BISI that is overlapping the TGIF. This is gonna be long-winded, but I'm telling you why someone would put. Okay, I don't want to say that, but let's say hypothetically somebody was trading and they were trying to figure out when do you use a lot of leverage and stuff like that. Listen to how much stuff lines up with this little BISI right here. We have a BISI laying across consequent encroachment of TGIF inside of a macro. It's also the 950 to 1010 macro. That's another thing. London buy side liquidity high is laying on top of all that, and it's also confluence with my indicator here. Like there's a lot that's loaded. This is like a bazooka right here. That's why you seen this. Boom. Everything I just said is why this happens. Oh, sorry. I can't say that. This is my take on what happened in price action. And that's pretty much all I got. This was pretty fun. If you enjoyed this video, please like the video, share the video, subscribe to the YouTube channel.